Bitcoin for investors. I'm so happy to be here today. Thank you for joining me. The investor's dilemma. Nearly all the return in the S&P 500 is coming from about 1% of the companies. It was the FANG stocks for about a decade. Now it's the Magnificent Seven. If you've got a digital monopoly like Google or Apple or Amazon or Microsoft, then it's pretty clear how you move forward. But there's 490 companies in the S&P 500 that don't have digital monopolies, and they struggle. So a conventional diversified portfolio of those assets is going to underperform the Magnificent Seven. And so the quest for alternative investments leads you to chase after real estate or natural gas rights or pipelines or this or that or art or professional sports team. This is interesting for the wealthy and affluent, but how do you bring that to the middle class, and how do you scale it across the institutional investor landscape? Is Bitcoin the solution? Well, if we look at all the asset classes and their performance over the past 15 years, you can see it's not hard to beat the CPI. You've probably got your own charts, but if your hurdle rate was 2%, then there's a lot of things you can do. On the other hand, the real monetary inflation rate, the rate at which the money supply has expanded over 100 years in the United States, is about 7%. In South Florida, it used to be $10,000 for an acre of waterfront property. Today, it's $10 million for an acre of waterfront property over about 95 years. For the gigabrains in the audience, it's a 7% rate. You lost 99.9% of your wealth over 100 years. If you held cash, if you held real estate, you track sideways. The S&P is a reasonable surrogate in many years for the rate of expansion of the money supply, but what you can see is just about everything fails against even something as simple as the S&P index. And so how do you beat it? Well, Bitcoin's beating it. Bitcoin's crushing it. Bitcoin's up 51% on average for the past 4 years since MicroStrategy got into implemented its Bitcoin strategy. You could say, well, that's just 4 years. And by the way, Bitcoin is the global alternative investment. It's the fungible, global, uncorrelated property that's going to appreciate with the money supply expansion, that's going to appreciate with technology, that's going to appreciate with human ingenuity, right? That is my thesis to you. That bar is saying it's definitely crushing everything else for the last 4 years. But you don't have to look 4 years back. You can look 6 years back, 8 years back, 10 years back, 12 years back. The only reason I don't give you the other numbers is they're so large that nobody believes them, right? 168% or 103% a year. Bitcoin's the winner in the asset class war in 11 of the past 14 years. It's been largely ignored by traditional finance and by conventional investors, and it's been kind of delegated to the ranks of the crypto bros and the degenerates. And a lot of, some people dismissed it as if my 22-year-old, kid gets it, then I don't want to get it. But on the other hand, a lot of conventional investors just never had a vehicle to invest in this before. And so it's only in 2024, with the advent of the SEC approval of spot ETFs, that this came onto the radar of the investment community. Now, advocates of Bitcoin, we believe it's digital gold, it's digital capital, it's digital property, it's perfect money, it's the apex digital transformation. It's a lot better than digital photos or digital books. Digital wealth seems much more valuable than a digital music song. It's a unique diversifier. It's the ideal capital asset. 300 million companies that are capitalized on treasury bills losing 4% of their value a year versus Bitcoin gaining 50% of its value. It just seems like we should recapitalize the world. We think it's a revolution in finance, and we think it's a paradigm shift in economics. We think we're going to turn the world inside out. The skeptics think differently. The skeptics think it's too good to be true. It's money for criminals. There's no use case. It's too volatile. It's backed by nothing. The government's definitely going to ban it. It'll be obsolete by Bitcoin 2.0, or it'll be hacked. You've seen a war of the advocates and the skeptics. I've been on both sides of this. Everybody is against Bitcoin before they are for Bitcoin. It is a very human behavior. In 2013, I was against Bitcoin. I tweeted this very famously. Bitcoin was $100 a coin. And I was, as the expert, sure the Bitcoin days were numbered and it was going to get shut down like online gambling. You probably heard this sentiment from many, many famous fellows over the past decade. By 2020, we joke, Bitcoin's on a need-to-know basis. By 2020, I had a need to know. My company came close to a near-death experience. We were staring at selling the company for 1x revenue. It felt like a fast death or a slow death, or maybe open your mind and embrace a new idea and take a risk. So, given a very simple, black and white choice, I decided to do some research and consider some new ideas. And my conclusion was, it's a monetary virus. It's a truth virus. It's a freedom virus. It's going to spread to 8 billion people, 300 million people. It's going to turn the world inside out. It is hope. It is a way out for my company, but it's a way out for the middle class, the working class, and it's going to be a revolution in the capital markets. And I expressed it in that piece of poetry. People still don't know what that means yet. I'm okay with it, because the longer they don't figure it out, the longer I have to generate leverage on this idea. This is the Bitcoin journey. You're born a denier. In 1 hour, you know enough to hurt yourself. You're a skeptic. In 10 hours, you think, well, it's an asset. I'm not going to buy it when it's cheap, sell it when it's dear, and I'm going to arbitrage it against other people. In 100 hours, you're an investor. You think, wow, this is like Facebook for money. This is Google for money, right? This is, as I would say, in the decade preceding COVID, the best investment idea was something everybody in the world needed, nobody could stop, and conventional investors did not understand. If you bought Amazon in 2010, if you bought Apple in 2012, if you bought Google, if you bought any of those, every conventional investor would have said, Amazon doesn't make any money. Apple's iPhone's going to go to $60 an iPhone. It's going to be commoditized. When Apple triples, we should sell half the position and buy Motorola, buy IBM. When Amazon doubles, you should sell it and buy a diversified portfolio of other retailers. But what happened is every computer company lost, Apple won. Every retailer lost, Amazon won. Every media company lost, Google, Meta won. And you can see why now if you understand digital transformation. In about 100 hours, I think you can get there. 1,000 hours, you're a maximalist, and you think, well, wait a minute, there's nothing I can invest in Africa. There's no hope for 6 billion people on the planet. They can't trust the government, the bank. They can't own property. They are screwed. And Bitcoin is a utilitarian entitlement. It's property rights for 8 billion people on the planet. It's the future. Right? If you believe it's an instrument of economic empowerment, if you believe it's an ethical imperative, you're a maximalist. Jack Dorsey's a maximalist. I'm a maximalist. It's a bit more than just making money. I definitely thought Amazon and Apple were going to crush everybody. That was just me, the investor. But I didn't think I had an ethical duty to spread that to 8 billion people on the planet to save them. With Bitcoin, it's a bit different. Well, you don't got 100 hours, so welcome to your 1 hour Bitcoin investor crash course. If you want to understand it, you got to return to first principles. So this is my alma mater, MIT. MIT's got, all the great scientists, Maxwell and Newton and Darwin on the masonry of the great court here. And the history of the world for an engineer is the history of technology innovation. Bitcoin represents the digital transformation of energy, not of information, of energy. It's a physics concept. It's all about energy. Humans separated from the apes because we extracted energy from matter. We call it fire. There was energy in it. We figured out how to pull the energy out. It makes a huge difference. The Romans, the Greeks figured out how to extract energy from a gravitational field. The gravity's here. How do you get the energy out of the field to turn a 1,000-pound stone or power up a gunpowder factory? It's hydropower. James Watt figured out how to pull energy from coal and coke and put it in a portable device that you could put in a ship, in a train, in a factory in the middle of a town. It was a profound breakthrough. John D. Rockefeller discovered you could actually bottle standard liquid energy. He called it Standard Oil. It changed the world. It won the US 2 world wars. It drove down the cost of energy or delivered power to the average human being 1,000x more than they could possibly harness on their own. A little boat's got 300 horsepower. A person's a tenth of a horsepower. The middle-class person's got 3,000 slaves in the back of their boat. That's what John D. Rockefeller gave us. Fermi figured out how to create a controlled nuclear reaction that created infinite, clean, carbon-free energy. What did Satoshi do? Satoshi discovered digital energy. Satoshi figured out how you could capture energy and program it in time and space with a computer. Now, this is it's a profound idea, but let me make it very simple. I have Beethoven's Ninth Symphony on my iPhone. I send it to all of you. That's non-conservative. I've still got it. You've all got it. You can send it to a billion other people. That's information. Information is non-conservative. I have $1 billion on my iPhone. I send it to Mark. I don't have it anymore. Mark can split it 100 ways. He can send each of you $10 million. You can split it 10 million ways and send people $1. Energy, capital, money needs to be conservative. The idea that you could send $1 billion from here to Tokyo over a computer is a pretty powerful idea. But the more powerful idea was when you could send $1 billion 30 years into the future and computers could do it. So all of the last 30 years of the internet revolution, all of these companies, these trillion-dollar companies, they're all based upon digital transformation of information. And for the first time in human history, we can actually put something conservative into a computer. Goes in, stays there. You can't make more of it. That has profound implications for the capital markets. I could talk about a lot of apps, but I only have 27 minutes, so I'm going to focus upon the one that's most valuable. The most lucrative application of digital energy is the digital transformation of capital. Right? This is a wealth map of the world, $900 trillion of wealth. And, there's a lot of real estate. There's hundreds of trillions of dollars of bonds. There's a lot of equity. There's cars. There's art. There's 16 trillion worth of gold. Up in the corner is 1.3 trillion worth of Bitcoin. Bitcoin is 10 basis points of the capital or the wealth in the world. Now, that's a way to see it, but this is a different way to see it. Half of the stuff that people own is for utility value. I own the Patriots because I want to brag about it. I own the Picasso to put it on the wall. I own the building so I can live in it, work in it. I own the factory so I can produce donuts, Hershey's bars, right? Utility. The other half of the capital in the world is a long-term store of value. People that are wealthy just want to stay wealthy. The rich want to stay rich. Some people want to accumulate more wealth. Most wealthy institutions or investors, they have a lot more capital than they need, and they're just looking for things to invest it in, and that's why they buy buildings they don't live in, and that's why they buy art that they bury in a basement vault in Switzerland. That's why they buy gold bars, and that's oftentimes why they buy index portfolios of assets. It's $450 trillion. How do we solve the problem of how do you stay rich? How do you conserve your wealth? It's basically the capital problem. Most of our world doesn't think hard about capital. If you go and you Google define capital and you look at what chat says or you look at what Google says, they're awful definitions. If you go back 200-300 years, you might have got a slightly better definition. But as an engineer, I think there's a simple way to describe it. Capital is economic energy, right? You could call it money. You could call it wealth. You could call it value. Under certain circumstances, you can call it power. Bitcoin represents the transformation of that capital from financial and physical assets to digital assets, right? The first law of money says that if you want to figure out the lifespan of an asset, ask yourself the question, how much do you have to spend every year to maintain it in pristine condition as new? And if it costs you 10% of the value of the asset each year to maintain it, the asset's only got a 10-year useful lifespan. So looking at financial assets, go to Argentina or go to Turkey where you've got high inflation rates. If there's a 35% inflation rate and you start with $1 million, you're putting $350,000 up in the year in order to keep the same amount of capital value. You can see weak currencies or crappy ways to store capital. Maybe a diversified portfolio of stocks might be better. You've got a whole set of financial risk factors, right? These are the things in a 10K, right? You can read 50 pages of these things, right? These are the ways you lose your money as an equity investor. After 35 years in business, I've encountered most of them, right? And you know, investing in companies or investing in bonds is a never-ending story of worrying about credit and competition and acts of God and politicians and tariffs and torts and the like. That's why those assets aren't perfect, and that's why a lot of high net worth individuals and most rich families I know, they own real estate, they own art, they own other sorts of assets. And you can look at this, you can see Ferraris and yachts aren't good ways to store capital for the long term because the maintenance cost is too high. On the other hand, a home in Florida will cost you 2% a year in property tax, and the politicians will mark it up every year, and you probably have to come up with $10 million over 17 years to pay the cost of a $10 million home. It's a 17-year useful life. On one extreme, raw land, maybe it works. It's got a 1% property tax, 1.1% on average in the US, but the politicians will keep marking up the value of the land, jacking up the tax. So you're going to have to rent it, and now you're into the issue of running businesses. Those physical assets have all of these risk factors, every type of tax imaginable, plus every other type of risk. You haven't escaped the problem. This is where Satoshi comes in. Satoshi, every school kid knows, and everybody recites this sentence. Satoshi figured out how to transfer value without a trusted intermediary. And they recite it like they're brilliant and they understand some deep insight. This is not the deep insight. This is the obvious insight to a person that doesn't understand money, that's never had any. The deep insight is when you replace transfer with store. If you can transfer $1 billion without a trusted intermediary, you can store $1 billion forever without a trusted intermediary. The reason that your capital degrades is the counterparty risk over time of having to store it with the bank, with the company, with the government, with the city, with the culture, right? With the counterparty, with the creditor. The ability to get rid of that is the breakthrough, because what Satoshi did is created an asset without the financial risk of a currency, a stock, or a bond, and without the physical risk of owning real estate or property. And so now you see the world differently. You're going to actually take your capital, you're going to spread it across a bunch of conventional assets. You're not stupid enough to invest it in assets with a useful life of 1 to 10 years. You probably figured that out. You're probably invested in assets with a useful life of 10 to 100, but not many people are brave enough to claim that their asset will last 100 years. Bitcoin's off the scale, right? If you take $1 million of Bitcoin, you're going to pay 10 basis points to custody it with a custodian. You're looking at a theoretical useful life of 1,000 years, maybe more than 1,000 years. It's a totally orthogonal thing, right? James Simons, right? They said, what's alpha, what's beta? He said, beta's the market. Alpha is orthogonal to the market. Bitcoin is alpha. It's orthogonal to the market. It's digital capital. Think about a building. You own the biggest building in LA. Okay, good for you. You're rich. Now think about everything you don't like about the building. What if I could take away the tax, the traffic, the tenants, the torts, the trouble, the mayor, the weather, the corrosion, and the regulator? A little bit better investment. But the problem is you've still got a building and everybody knows you have more money than them and they're going to think about how they take it. So how do I fix that? I make the building invisible, indestructible, immortal, teleportable, programmable, divisible, musical, fungible, and configurable. When I say musical, I mean I want you to imagine vibrating gold at 440 hertz. Doesn't happen. Gold vibrates once a year. But music is high frequency energy. In this particular case, when you get digital energy or digital capital, you can vibrate it on 10 different wavelengths, high frequency. You can create a symphony of money. This is the ultimate high frequency trading or high frequency finance type opportunity. It's not just digital, it's global. Look at the map of the world. I give you $1 billion, I drop you in Africa. Now you can buy anything you want in any country in Africa. The catch is you got to hold it for 30 years. What? Where? I submit to you, there's nothing you want to buy anywhere in the entire continent that's as good as holding Bitcoin. By the way, nothing as good as holding just about any scarce desirable asset in the United States. Now do the same exercise in South Africa or South America. Every country in Africa is unstable and collapsing. The Russian currency collapsed 25 years ago. The Brazilian currency collapsed 25 years ago. The Argentine currency collapsed every 20 years for the past 120 years, is, probably as long as we have recorded history. And if you actually recorded the previous few hundred years, it probably still collapsed. Asia, it's the same issue. Nobody wants their capital tied up anywhere except in the most secure network, the most secure nation, the most secure asset. So if you're a global investor and you're reaching for a capital asset to maintain your wealth, Bitcoin offers a lifeline to you. You can think of it as cyber Manhattan. Right? If you imagine a city in cyberspace, 276 blocks high, wide, and deep, that's the integer cube root of 21 million. When you buy a Bitcoin, you're buying one of those blocks. There's never going to be more than that much space. Maybe you won't live there physically, but there's no reason to think that one day everybody on the world won't want to put their money there because it's the safe place to put their money. It's orthogonal to every other risk in the real world. By the way, is it a good idea to buy Manhattan real estate in 1680? Yeah. 1720? Yeah. 1760? Yeah. 1800? Yeah. 1860? Yeah. 1900? There's never been a bad time to buy scarce, desirable real estate in the most desirable nexus for commerce in North America. Bitcoin represents the nexus of digital commerce. Yeah, everybody's buying it from someone else paying more than the previous person paid for it. That just describes the real estate market in London or New York, probably LA too. What about volatility? Well, there's a lot of factors that drive it, right? It's the most open, liquid, leverageable market in the world. There's 1,500 different exchanges where you can trade it. It's 24/7. You can short it Saturday night, buy back in Sunday morning. It's a very, very free market. It's going to be volatile, but that's a feature, it's not a bug. The volatility is what drives the superior returns. It attracts massive amounts of capital. It gives the traders a way to generate yield. There's a company twice as big as MicroStrategy run to not be volatile. It generates perfectly good EBITDA. It's fine. It's very predictable. It has an open option market of $5 million. MicroStrategy had $32 billion in open interest a day ago. The traders don't care about non-volatile. Actually, they want the volatility. When they come in, they buy the asset. When they buy the asset, they drive the price through the roof. That volatility creates opportunities to securitize the asset, right? If you actually plug the volatility in one side of a financial company, and then you strip the volatility or strip the risk or strip the return, you can actually sell it out the other side of the company to everybody's benefit, right? That is one of the reasons MicroStrategy has been successful so far. And the volatility creates access to capital, right? Take away the volatility, your cost of capital is 12%. Add the volatility, MicroStrategy borrows money at 82 basis points. What about performance? Everybody's looking for something uncorrelated to the S&P 500 with a higher return on a risk-adjusted basis, right? That's the holy grail. Bitcoin is that asset without a counterparty risk. A counterparty risk to who? Competitors, countries, corporations, creditors, cultures, or currencies. Everything else you own is facing the risk of one of those things. Bitcoin is orthogonal to that. So I just gave you the fundamental principle reason why it's uncorrelated asset, but you don't have to believe me based on principles. You just look at Fidelity's research here. This is actually looking and showing it's got the best Sharpe ratio of all these assets. It's also got a 19% correlation to the S&P. Traditionally, over the term, it's like a 20% correlation, right? And so there you go. Now, since MicroStrategy entered the market, Bitcoin is up 51%. Bonds are down 4%. Every company on earth uses the bond as their treasury asset. Wonder why they only live 10 years or 15 years. They're basically injecting a toxic asset onto their balance sheet. And if you have $100 billion of that, not only are you suffering nominally, but the cost of capital is 14%. So imagine the cost of capital is 14%. You buy bonds under the best case, you're getting 3% after tax. You're losing 10% of your capital every year. So the result is most companies decide capital is toxic and they go to negative working capital. And certainly every institution, university, or high net worth individual or family is running with negative bonds if they're smart and they're running with something different. So the Magnificent Seven beats the S&P if you just want to live or die by NVIDIA and Apple and Microsoft, but they also have a big target on their heads right now. Bitcoin's beating the Magnificent Seven. Isn't this too good to be true? This is the Ray Dalio quote. The government's going to ban it. It's too good to be true. And I wonder if people say that because they really think it's too good to be true, or because, you know, your janitor could buy Bitcoin and outperform everybody else in the finance industry, and that might not be good for people charging 3 and 30. So there are a bunch of questions for institutions, right? Will it be banned? Will it be copied? Can it be hacked? I asked ChatGPT these 3 questions. List every country where it's illegal to own Bitcoin. Pretty much everywhere. It's not banned. List every country where it's illegal. It's not illegal in China. They just like to control the trading and the mining of it. You can actually own it. It's illegal in Morocco, Algeria, Bangladesh, Egypt, Nepal, Iraq, Qatar, right? These leaders of global finance. Has it been hacked? No, it's never been hacked. Some of the fly-by-night crypto cowboy exchanges have been hacked, but the underlying protocol itself has never been hacked. Has it been copied? Thousands of times. Anybody can copy it. It's kind of like you can create a city in the middle of Kansas and you can call it New York. You can copy New York City, but why doesn't that work? Right? Because once all the smart money has moved to the place called New York City, calling yourself or copying the names of the streets in New York City and copying the governance of New York City and the laws doesn't make you New York City. Right? How the copies perform, they all fail. They're all crashing. These are all the major cryptos. They're all just breaking down against Bitcoin. Every one of them collapsed. You almost need it to be copied so you could see that there's a winner, right? You couldn't know there's going to be a winner 15 years ago. You had to wait for the market to decide. That's Bitcoin dominance. It keeps creeping up over the last year. You can see it's winning. Another simple way to describe this is a bunch of rich families get together one day, 100 of them, and they decide they want to create a bank in cyberspace, and they don't trust each other, and they want it to last for a few hundred years. So they create a piece of software. They don't trust anybody to run the software. They give it to everybody. They cap the number of units of the bank at some number, call it 21 million. And then they all buy in, however they want to buy in, and the network just runs forever. Now, can someone else implement the same thing? Sure, you can copy it. But the issue is if the 100 smart billionaires all picked this bank and you try to copy it, they're not going to your yo-yo bank or yo-yo coin network. The smart money decides what they're going to support. You've already seen what's happened. This is the number 2, ETH. It's collapsing. It's down 36% year over year against Bitcoin. People are concluding that Bitcoin is the winner. It's going to dominate the entire marketplace. ChatGPT thinks you should buy it for diversification, inflation hedge, growth potential, and the digital gold narrative. Not awful. This is Larry Fink.
Now, I know you have been a leader in willing to embrace crypto. You have made it so that people can be in Bitcoin. We hear that you are thinking about Ethereum. These are incredible things. Now, BlackRock is not known as a gunslinger by any means. So you obviously must believe that this maybe is an alternative. Is this an alternative in order to be able, because of a deficit, maybe something long-term people should have?
Absolutely. As you know, I was a skeptic.
Yes.
I was a proud skeptic. And I studied it, learned about it, and I came away saying, okay, my opinion 5 years ago was wrong. Here's my opinion today. This is what I believe in today. I believe the opportunity today. I believe Bitcoin is legitimate. I'm not trying to say there's not misuses like everything else, but it is a legitimate financial instrument that allows you to have maybe uncorrelated, non-correlated type of returns. I believe it is an instrument that you invest in when you're more frightened, though. It is an instrument when you believe that countries are debasing their currency, debasing their currency by excess deficits, and some countries are. I believe we have countries where you're frightened of your everyday existence, and if you have an opportunity to invest in something that is outside your country's control, then you can have more financial control. And so I'm a major believer that there is a role for Bitcoin in portfolios. I believe you're going to see that as one of the asset classes that we all look at. I look at it as digital gold, as I said before, and I do believe there's a real need for everyone to look at it as one alternative to, I would say, the optimism that I have in the world. If you want to hedge hope, Bitcoin is not an instrument for hope unless you're hopeful you're going to make a lot of money on it. But I look at it as a vehicle in which you're expressing your financial acumen in something that you're more frightened of the world, you're more frightened of your existence. And I believe there's a great industrial use for it. And I think a lot of people are missing that.
I couldn't agree more. I changed my mind about it when you did. You had been my thinking. It was like, I don't believe it. So I can't believe it. I want to thank Larry Fink for the message of optimism.
Thanks.
And also for a great quarter. Larry Fink is the co-founder, chairman, and CEO of BlackRock. I think the most important investment company in the world.
Thanks, guys. Carl.
People saying it's not backed by anything. What backs it? It's backed by power. It's backed by 700 exahash. That's more computer power than Amazon and Microsoft could throw at the network if they turned every computer against it. It's backed by 18 gigawatts. That's more power than the U.S. Navy runs on. It's 18 full-on nuclear reactors. It's backed by the economic power of $800 billion of real invested capital, and those people aren't going to give up that money easily. It's backed by the political power of 420 million crypto enthusiasts and 220 million Bitcoin holders. That makes it the most powerful crypto network in the world. It's got the most popular regulatory and technical support, but it's also got the most digital, political, and economic power. It's a simple idea. A bunch of smart people don't trust banks, don't trust currencies, don't want to trust a company. They just want to keep their money forever. And they're putting it in the bank and cyberspace. So it's the best bank. MicroStrategy, we started out opportunistic on August 11th of 2020. We bought Bitcoin about 40 times, call it dollar cost averaging. We started with $250 million. We ended up buying about $10 billion. Every quarter we accreted more. It's a very simple strategy. It's kind of like, I believe in Manhattan, I'm buying Manhattan. I'm buying it with equity, I'm buying it with cash, I'm buying it with debt. I'm going to keep buying Manhattan. I think one day everybody will want to live in Manhattan. I'm not selling Manhattan. It's not a complicated idea. So where does that leave us? Well, we did that on top of this, okay? So if you're basically capitalizing on something going up 50% a year, that's probably a good idea. What's better than Bitcoin? More Bitcoin, levered Bitcoin, right? That's the only way to beat Bitcoin. So what we did is we borrowed $4 billion 82 basis points, bought Bitcoin with it, and then we issued equity at a premium underlying Bitcoin and bought more, and we swept every cash flow into Bitcoin. And the result is, as of right now, we've outperformed NVIDIA, which means we've outperformed all 500 stocks on the S&P 500 in those 4 years. And we did it with a very straightforward digital property or digital capital strategy. And you can see Bitcoin's crushing the S&P, MicroStrategy's crushing Bitcoin, and and the greatest companies in the world, Tesla, Google, Meta, they're doing okay. But the big idea here is, if we go from $1 trillion of capital in this digital network to $100 trillion of capital in this digital network, then what do you think's going to happen? Like, how do you make money? It's not that complicated, right? You buy the thing everybody else is going to buy before they get there. Our enterprise value was 600 million 4 years ago. It's 41 billion right now. 6,000%. Right? So what's going on? Bitcoin is eating the capital markets. MicroStrategy is just a actor, right? We become the biggest issuer of converts. We're becoming the biggest, a big option play. We're becoming a big equity play. The other day, there were only 10 companies in the market that outtraded our equity. This is not us. This is digital capital. This is the transformation of $400 trillion of capital to something infinitely better. We're just riding the wave. What you're watching is the birth of an asset class. I mean, the first 12 years was crypto cowboys. The last 4 years was the crazy years. And now we're in the era of institutional adoption, and we're headed toward a place called 0.99. 0.99 is the end of the digital gold rush. I'll say some more about it in a second. Then the network was launched by Satoshi. Satoshi walked away and disclaimed, it's basically walked away from all the coins. The IRS designation as property in 2014 was a very important milestone. The block size wars illustrated they answered the question, what happens if you fork Bitcoin? It was pretty important to see that. The first miner to go public was 2017. Fidelity got into the space in 2018. COVID accelerated the institutionalization of Bitcoin with the lockdowns and negative interest rates. MicroStrategy is the first public company to come into the space. We never would have done it without COVID and zero interest rates. But we were followed by Square and Tesla and Coinbase. And then the Gensler administration normalized Bitcoin as an asset, not a currency. It's a speculative digital asset. You want to risk your money on it, fine, but it's not a currency. Those words were echoed by Jerome Powell, Christina Lagarde, and Janet Yellen within a number of months after Gensler took office. Janet Yellen gave the famous Legend of Satoshi speech. That was the Secretary of the Treasury acknowledging the innovation that is Bitcoin. That was a pretty seminal event for the institutionalization of the asset. You could have seen the writing on the wall then. January of 24, we approved the spot ETFs. May of 24, we had the SAB 121 repeal movement, where both Senate and the House overwhelmingly voted to allow banks to custody Bitcoin. That was what the significance of that is. RFK said he thought the U.S. should buy 20% of the Bitcoin supply, like Louisiana, like Alaska, like, by the way, LA. We kind of took it from the Mexicans during the Mexican-American War. It was a pretty profitable acquisition for the United States. I think the U.S. paid like $15 million for that entire Mexican territory. Morgan Stanley approved this for solicited sale just a month ago. Fair value counting kicks in January of 2025. And so this really is the digital transformation, not just of capital, but the capital markets. The future is faster, smarter, stronger. Gold was capital for thousands of years that settles in T+1 year. Nobody can run an economy on T+1 year. So we went to stocks and bonds, and we settled in T+1 week. It used to be 5 days to settle, then it was 3 days to settle. Now it's 1 day to settle after 50 years. Bitcoin settles T+1 hour on the base network. But the difference is some people somewhere can settle between Friday and Monday on a traditional network. Anyone, anywhere, which means any computer, any AI can settle anytime on the Bitcoin network. This is a profound difference because we're headed from T plus 1 hour to T plus 1 minute to T plus 1 second to T plus 1 millisecond. And when you think about $1 billion moving through a credit network, it takes 2% every time you do a hop. It's 1 month to actually finally settle. It might take you 4 years to move the money 40 times. What if I moved or vibrated $1 billion 40 times a second, computer to computer, right? The credit world is not fast enough, not strong enough, not smart enough to keep up with where we want to head. You need a digital world if you want to be able to do things 1,000,000 times an hour, and you want millions or billions of computers to be able to talk to each other. And that's the Bitcoin world. You're staring at the beginning of a digital gold rush. You've got about 10 years between now and 0.99. And at 0.99, we had absolute scarcity. What does that mean? It means 99% of the Bitcoin is mined right now by about January 2nd of 2035. You've got 3,700 something days. During that time period, you have natural sellers. Those natural sellers, the miners, are going to mine and sell 1.1 million Bitcoin, about $75 billion worth of today's prices. That works out to about 20 million a day. I think MicroStrategy's plan is to buy half. We've been buying half. That means there's not that much. There's 10 million for anybody else. There's a few other companies like Marathon that are getting in the space starting to buy it. But you can see this is the most powerful lever in the financial world. And I would submit to you, it's the greatest technical lever, the greatest ethical lever, the greatest financial lever. Because when more than $10 million a day of natural demand pops up, the price has got to move north in order to find a market clearing seller, right? At 0.99, lost Bitcoin offsets the mined Bitcoin. The asset becomes the first deflationary asset in the world. That makes it the world's first perfect money, right? It's a commodity, but it's a perfectly scarce commodity. There's never been such a thing. Everybody thinks commodities are dog investments, and they are because they're not scarce. You can manufacture infinite silver, palladium, gold, and oil. That's why it don't make sense. That's why gold doesn't make sense. But Bitcoin has all of the legal, regulatory, ethical advantages of a commodity, but it has the absolute scarcity monopoly power that you could construct with a cartel. But if a company did it, it's illegal, right? When a protocol does it, it's not only legal, it's ethical. It's a big, profound idea here. So the institutional adoption of Bitcoin is coming right now. It's not a company, it's an asset class. And what you see is 12 ETFs in the US, 28 spot ETFs outside of the US, 28 public companies, 29 Bitcoin mining companies that are public, a bunch of derivatives. They're all exploding. Everybody in the world, you'll see a spot ETF in Shanghai with a Chinese bank, and that'll solve the compliance and custody problems for Chinese nationals. And so there's an entire industry that's exploding here. So what's the future? Well, all of these things are highly predictable. They're all coming, right? The approval of bank custody. BNY Mellon got approval from the SEC just last week. It's only a matter of time before they custody, and then they'll be followed by 2 or 3 of their competitors. The options market for spot ETFs, they got approved by the SEC about 2 weeks ago. You can see these things coming. A digital assets framework, you're definitely going to get one within 90 days with one administration. The other one will probably deliver one within 2 to 3 years. AI is going to create massive capital, and those AIs are going to want to be able to manipulate capital very rapidly. It's going to drive Bitcoin. And if you don't believe any of those things, all you got to do is wait for your government to print more debt. And in a world where governments run a surplus everywhere in the world and act responsibly, maybe this is not a factor, but I don't think you'll find that anywhere in the world. Big tech is adopting Bitcoin, and as you build it into the iPhone or the like, it's going to drive up the value of the asset. And then, of course, just awareness amongst the 8 billion people on the planet that there's a better idea is causing people to embrace Bitcoin. And if it's not awareness and education, then it's chaos. Every time a government melts down, destroys their currency, every time a bank fails, you create another generation of Bitcoin adherents and believers. You can run your own models. This is the Bitcoin 24 model. It's open source. Google it. Go check it out. You can forecast the next 21 years. It's a macro model and a Bitcoin model. And you take this map and then you put in your own thoughts about how fast everything's going to monetize, demonetize, grow, and what you think about inflation and innovation. I've got a model, and here's my model. My base case is Bitcoin goes from 0.1 to 7% of the assets in the world, and it goes to 13 million a coin over 21 years. The bear case is 3 million a coin. The bull case is 49 million a coin. Generally, I think gold will demonetize. I think money will trade sideways. I think bonds will slightly demonetize. I think equity will do better. There's going to be some mega multi-trillion-dollar AI-driven corps. I think real estate trades sideways and the money supply expands about 7%, and you end up with a map of the wealth of the world that looks like that. Not profoundly different, except that there's a new square in the upper left corner called Bitcoin that represents the global monetary index for people that are capitalist that just want to keep their money. The big profound idea of Bitcoin is I want to own 1/21 millionth of all the money in the world forever. That's all I want. I'm not looking for anything more than that. So what are the benefits of investing in Bitcoin? And this is my final slide. Well, it's the emerging dominant digital monetary network. It's just as good as buying Amazon or Facebook 15 years ago. It offers enormous upside potential. You're probably not going to 100x your NVIDIA stock. You're probably, if you can find a 10x, that's probably a good idea, but I don't think you can name any 100x's other than this one. This is a 100xer, and it's certainly a 10xer. It's structurally uncorrelated to traditional risk assets. It's not a currency derivative. It lacks all the risk of traditional stocks and bonds. It does offer benefits of property, but stripped away the liabilities of property. It is a global fungible asset recognized by everybody around the world. It has appeal to billions of people. It is the most widely held investment asset that's fungible in the world. And it did that without a marketing budget in 15 years. I can go anywhere on earth and I will get noticed by bartenders, busboys, the guy fueling the jet, billionaires on the beach, everybody in the middle, right? By the way, you have a lot of employees here running your facilities. They've been Bitcoiners since 2017, right? That you'd be amazed how many people know this thing. It represents a digital transformation of the capital markets. Like, how about I want to trade anything, anywhere, 24/7, 365 at 60 hertz at the speed of light, right? Right? It's a big idea. It's a profound idea. If you want to sell something, if you want to take $1 billion short position on Saturday afternoon, it's the only thing you can liquidate in size. It's a profound, big idea. And I guess my other point would be the fundamental drivers are all totally predictable. It's like a slow motion train wreck. You know exactly what's going to happen, right? Ask Mark. It's like, you're like, this will happen and that will happen. It's just a question of, does it take 4 weeks or 4 months? But it's definitely going to happen. You can't stop it. And the beauty is having something which is obviously structurally impaired that's going to get unimpaired with a high degree of certainty, and you get to front run it. And it is the only global commodity that's provably scarce. It would be an ethics violation for a senator to stand up and say, God bless such and such stock, or I want America to acquire a strategic reserve of your favorite security. But you can call for a chick in every pot. That's a commodity. You can give everybody their own home. That's a commodity. And you can call for the United States to own Bitcoin. That's a commodity. And so it gives it a profound advantage in commercializing. And so thank you for your time. We own hope.com. And if you remember Bitcoin is hope and go to hope.com, you'll find an array of Bitcoin resources. You'll find a bunch of educational courses. You'll find videos. You'll find books. You'll find links to all the influencers, links to all the channels. So just think Bitcoin is hope. You could read the Bitcoin Standard, but you can find 3 or 4 other really good books on Bitcoin that you could read. And so I would just suggest you go to hope.com and check that out. I think that most of the risks really are just regulatory dislocations and uncertainties. Like how does every government treat this, especially when it comes to things like capital controls? Like the Chinese shut down Bitcoin mining, not because they were against Bitcoin, but because they didn't want a billionaire in China to have $1 billion in their pocket that they could cross a border with. So most of the noise is around the usage of it as a currency, and there's a lot of AML, KYC angst around that. And then around capital controls, just about every government in the world allows you to own property. It doesn't mind if you own a building or own a bunch of stuff. They just don't want you to move the building or take the stuff with you. So most of the noise, it's all around that kind of tax regulation, currency regulation, travel rule type stuff. Otherwise, I think the underlying technical issues have been settled over 15 years by attacking the network. There is a $60-70 billion pool of Bitcoin that you could steal from Satoshi if you actually could crack it. It's been sitting there as a reward to a hacker for 15 years. No one's claimed the reward. I think we're past the event horizon at the point that the real risk was it would be designated as a currency and therefore an enemy of the dollar. And then there was some rattling around 4 or 5 years ago. But when people began to embrace it as capital or a capital asset or as property, you got a very hard delineation there. The fact that the EU is designated as an asset or property, and the fact that the US has, and the fact that Brazil has, and the fact that China has, and the fact that Russia has, and the fact that the UAE and Singapore has, suggests that its status as property is pretty clear. All of these other things just create jittery volatility in the market because someone says, oh, I heard someone put a rule on that. And most of the volatility is upside because all of the catalysts that are regulatory right now are the regulators allowing banks to handle it or allowing corporations to handle it or making it easier. And so as those regulations normalize, I think you just attract more pools of capital into it. There's a global consensus that Bitcoin is a digital commodity. That has emerged as clear. That is the one massive advance in the last 4 years, that global consensus. You just saw Gary Gensler on CNBC a few days ago say, I and my predecessor have both noted that Bitcoin is not a security, right? Like as to underscore, and then go on to say, and you can buy it safely on NASDAQ or New York Stock Exchange on those ETFs we approved, right? And that's about as big an endorsement as you're ever going to get from a regulator. But that is the thing, like when the IRS said it's property, that was a big deal. I mean, the IRS doesn't let you designate piles of counterfeit money as property. You can't designate illegal drugs as property, right? And if you look at the Overton window, it's shifted, when you had Trump say, never sell your Bitcoin. Well, the U.S. government only doesn't sell 3 things. We don't sell national parks, we don't sell nuclear stockpiles, and we don't sell Bitcoin, right? If that's the position, that elevates it above every bond, every security, every diamond, every piece of art, everything you could possibly own, every yacht, every skyscraper. So it's a pretty profound shift in people's mindset over the last 4 years in this asset. The crypto anarchist and the OG crypto community wants to be able to trade high-speed digital currency like legal tender with full privacy anywhere in the world. And that's a crypto anarchist and libertarian view. And that is a tension with the traditional establishment in the EU and the US and pretty much everywhere in the world. So I think it makes not one whit bit of difference to the investment thesis, because I just showed you $450 trillion of capital. The use case for a Bitcoin as digital capital is worth $450 trillion, which means if we capture 10, 20% of it, you're going to 100x from here. The other use case, digital currency, right? That's no more than $5 trillion, maybe $10 trillion. If you could move Tether, like stable coins, everybody wants the US dollar as their currency, by the way. They don't want a deflationary asset that changes value and is volatile. They actually want the dollar. They want Tether. They'll buy 125 billion of it from Tether without a headquarters, without an auditor, without a regulatory regime, because they want it so bad, right? But the EU, their issue is they don't want people taking $1 billion quietly over the border out of their country. The Chinese don't want it. The Argentines don't want it. The Brazilians don't want it. There is no country generally on earth that likes the idea that people carry lots of capital out of their country. There's always going to be a tension, but it's around capital control, or is it going to be a tension around tax? And so if you conceptualize, if your entire thesis is I'm only investing in it because I think it's a digital currency, you're going to be anxiety ridden all the time because it's not currency. It's not legal tender. It makes no sense to use it as legal tender, technically, economically, politically. So I would just say, just assume it's not legal tender, it's not currency, and that use case is irrelevant. I've said sometimes, like, if I'm just buying $1 billion of it to hold for 30 years, it's very clear. There's no regulatory uncertainty about that. Is that legal? That's legal everywhere on earth. That's not a problem. If you're actually trying to use it to replace the US dollar and the US payment network, that's like somewhere between 1,000 and 1,000,000 times harder. And you're doing it for 1% of the benefit. So it's just a distraction. I just wouldn't even focus on it. A lot of people make bad investment decisions because they get caught up in everyone that says it'll be banned thinks, oh, it's replacing the dollar and it's replacing the banking system, and therefore I won't buy it. They just misunderstand what it is. It's a foolish interpretation that's going to cost you billions or tens or hundreds of billions of dollars. It's like nobody wants to use their building on Fifth Avenue to pay for coffee. It's like, but there's a lot of rich people that own buildings in Manhattan. Like, you can't buy a building in Manhattan because you can't pay for coffee with it. It's like, the government won't let you. It's like, but I'm rich and I own Manhattan. Okay, so think of it like that. It's a digital building.
10, 12 years ago, it was really easy to invest in Bitcoin because you could look at it and you could say, this is like gold, but much, much better. And the market cap is a lot smaller than gold is. So there was this very clear relative value opportunity that got me interested in this a while ago. I think now I try to think a lot about like what a good skeptical case is as someone who is still very bullish. And I guess the best one I've been able to come up with is that in 1974, I could have bought physical gold bricks and buried them at an undisclosed location in Delaware, so my carrying cost would effectively be zero. And over the last 50 years, those gold bricks would have done much better than the dollar. They would have protected me from inflation, but they would have not done as well as the equity markets have done over that 50-year period. And I think you had some slides showing that. And 50 years is a pretty long time. I think for me at this point, that's a 50-year investment horizon is longer than I'll be around if the actuarial tables are right. So I guess I'm curious why digital gold for the next 50 years will be better than physical gold would have been buying in the 70s when a lot of the arguments about fixed supply, et cetera, were sort of pretty similar. Thank you.
It's a good question. It's kind of like, why are digital photos better than Polaroid photos? Remember the value of Polaroid or Kodak versus the value of Facebook or Instagram or Apple. And the answer is because the digital thing is 100 times better than the physical thing. So gold isn't a great metaphor because gold has been an awful investment. You meet a bunch of rich people and they didn't get rich buying gold. So if I wanted to fix gold, I would basically make gold transparent, evanescent, let you magically hold it in your head, teleport it at the speed of light and move it 1,000,000 times a second, and then let computers program it. And then I would outlaw the ability to mine any more gold. And then I would let you put small parts of gold on an iPhone. And if I did that, it would be more valuable than the current $14 trillion market cap of gold. If I strip away all of the physical liabilities of the thing. And, you know, the biggest liability of gold is A, it's slow, B, it's you can't, how do 8 billion people self-custody their gold, decompose it, and carry it on their iPhone around with them, right? So gold was always going to be a defective asset in the 20th century. In the 21st century, it's too slow, too weak, too heavy. But it's still worth 16 billion. Bitcoin's worth more because Bitcoin really, if you think of it as a digital building, it's like, again, I put you back in Africa and I let you buy any building in Africa. And the answer is there's no building in Africa that you want to buy more than a digital building, right? That's the issue. So if you think about it, if you focus on gold as the metaphor, then you get kind of a dead rock. And as soon as it demonetizes, it's literally just metal. But if you focus on the digital part, it's like, well, what's it worth to have the digital monopoly on communications, or the digital monopoly on relationships, or the digital monopoly on photos, or the digital monopoly on retail? And that's worth $1 trillion to a company, even though it's got attack surfaces. But what we're talking about here is literally digital capital. And gold will never be digital. And so what is the candidate for digital capital? It can't be an asset backed by a company. It can't be an asset backed by a country. So how are you going to create digital capital? And Satoshi figured it out. So, you know, I'll make one more point. You know, if you have $10 million of gold buried in your backyard in Alabama, you're not going to find some guy with a Bloomberg in Singapore that comes up with a high frequency trading strategy that uses your gold, right? No one's high frequency trading gold. No one's going to sell $10 billion of gold on Saturday afternoon, buy it back on Sunday, levered up 100 to 1 using a computer. But on the other hand, if you're a farmer in Alabama holding $10 million of Bitcoin, there's a dude in China or Hong Kong or Singapore or London engaging in something you don't understand that's probably illegal where you live, that's going to create a demand for Bitcoin, which is going to drive up the price of Bitcoin by a factor of 10. And so you doing nothing are benefiting from financial entrepreneurship, technical entrepreneurship. When the government of fill in the blank, China, Russia, something melts down and their currency goes to zero, and those people stampede into Bitcoin, your Bitcoin buried in the back of your yard in Alabama is going to be worth 25 times as much. If the entire world agreed on the gold standard, and if we all use gold as money, you could make an argument to that effect. But I think that has been settled since 1971, arguably since Roosevelt, or maybe since World War I. Nobody reasonably thinks that you can run a 21st century economy on gold. But you do need a commodity that's high speed, that's perfected. And the world searched through 4 million of them, and it's picked one that's the winner. And that's why it's winning, because it's the one best suited for that.
So you talk about regulatory risk for holding Bitcoin. And now I want to shift a little bit on regulatory risk for mining Bitcoin. And specifically, this question comes from recent news in Texas about the forecasted growth in electricity demand from Bitcoin mining. They're talking about having to increase supply by about 70% in the next 6 years. Half of that is driven by data centers and Bitcoin. And they're talking about looking more closely at the industry because of that. So just curious on how you see potential regulatory risk on mining specifically from.
Well, it's important to note that Bitcoin mining is all about generating hash rate, and you do it with ASICs, and the ASICs, are measured in efficiency by a metric called joules per terahash, and the joules per terahash has fallen from 1,000 joules per terahash to 500 to 200 to 100 to 30 to 20 to 10. It's going to 5. And so the ASICs keep getting more powerful. So although the hash rate is going up 70% a year, the demand for electricity is not going up that fast. In fact, it's kind of headed towards some sort of peak where it just grinds up very slowly. The network gets exponentially more secure. The demand for electricity does not grow in the same fashion. the issue of was Bitcoin mining going to suck up the energy in the world was exciting in 2017 when the World Economic Forum predicted that all the electricity in the world would be taken up by 2020 by Bitcoin miners. And the truth is, it's like 10, 20 basis points of energy, maybe 50 basis points of electricity. And that reached peak FUD around 2021. And in 2024, that has been pushed off the headlines because the demand for, or the use of power in Bitcoin mining is like, as I said, 18 gigawatts. The AI demands of the hyperscalers are running 30 gigawatts a quarter, and they're chasing after 600 gigawatts. So at the end of the day, Microsoft and Amazon and Facebook and Google, they want an order of magnitude more power than Bitcoin miners. And what's really happening here is the Bitcoin miners are spread to the edge of the grid where the power is stranded, toxic, or negative cost. And they'll continue to monetize that power. But the hyperscalers are going to dominate the energy conversation, and you can already see that the political winds have flipped to be pro-nuclear ever since Microsoft and Apple and Meta and the like decided that nuclear was good, and they think it's good because they need gigawatt data centers. And so if you were forecasting, you forecast Bitcoin miners might take 50 basis points of power maybe, but it's never going to be more than 100 basis points. It's going to be between 10 and 50 of electricity. It's going to be much less than 50 of overall energy. And I don't think there's much controversy on that anymore. I think even politically that's going to disappear. There's a few countries here and there that will occasionally ban mining. The Chinese didn't ban it because they didn't like the electricity usage. They banned it because they thought it was used to evade capital controls. And that's why they're concerned of it. A lot of times countries will have subsidized electricity and the miners will use the subsidized electricity, and then the politicians will decide they don't want their subsidized electricity to be used for that. But these are all kind of edge cases. Yeah, you've got all this, everybody in the world that's smart, that has money, that wants to store their money in cyberspace has picked Bitcoin. Bitcoin's got 800 billion of real capital. MicroStrategy's put $10 billion of capital. You can't find anybody that put 100 million of real capital into the next thing. That being the case, if all the smart people in the world are storing their money in this network, then this network is the one upgrading its hardware technology at the fastest rate. And if someone comes up with something better than an ASIC to defend the network, then you're going to have 27 public companies that obsess over it every day that are just going to incorporate that into the next ASIC design or the next Bitcoin mining design, and it'll just make the network that much more secure. So I don't think there's anything systemic. El Salvador's buying it. Bhutan has been a buyer of it. It's creeping into various nation states. I think it's creeping into some sovereign wealth funds. I think the Overton window did shift. The Lummis bill, the endorsement from RFK, the endorsement from Trump, all of those have put it into the political fabric. But really, there's nothing probably in your portfolio that you own where all the politicians are squabbling over how much they love it and they want nation states to buy it other than Bitcoin. So generally, I just see the political winds are very good and auspicious.
Does it matter who Satoshi Nakamoto is?
No, doesn't matter at all because Satoshi doesn't control the network. And in fact, the advantage of Bitcoin is there's no founding team, there's no corporate beneficiary, there's no pre-mine. That's what makes it ethically superior to everything else. That's what provides the ethical legal foundation for it to be global capital or global money. I think that there are three big prongs for institutional adoption. First is the SEC endorses the asset. The second is the financial accounting community endorses fair value accounting. The third is the banks will buy it, sell it, and custody it for you. The third is like the main line, right? Because at that point, Google can wire $1 billion a month to JP Morgan or something and say, just convert it to Bitcoin and then wire 500 million back. And we move on the rails that move tens or hundreds of billions of dollars routinely for corporations. So I think that mainstream banking support is really important. I think the asset class can go to probably 5 trillion to 10 trillion without it. But I think if you want to go between 10 trillion and 100 trillion, you have to have mainstream regulated too big to fail banks handling it. I think it's still too early to say, what kind of yield opportunities will be available. But I think that it's pretty clear that once banks can buy it, sell it, and custody it, then it could become part of a collateral package that you can borrow against. And there's a lot of people that want to borrow things to short them. And so I think that the banks will basically sit in the middle between the people that want to borrow, the people that want to lend. I think there will be a lending market. I think there will be a yield capable. I think there will be the ability to take reasonable leverage in different ways against it in the same way you could with Apple stock. Well, if Bitcoin's digital capital, then you can increase the longevity of your corporation, your bank, your institution, your church, your school, your government, your city, your country, your county, your movement, your anything, simply by integrating it into the balance sheet or integrating it into the operation. So in essence, it's just a universal sweetener that improves everything. And you can see it constructively as a solution. There's a crypto anarchist community that say, F the banks, down with the dollar's the enemy, the banks are the enemy, Wall Street is the enemy, money managers are the enemy, governments are the enemy, tax is the enemy, and they're just against authoritarian control of any organization bigger than, the dude that they hang out with drinking beers with on Saturday. And so they tend to fall into a spiral of fuck the banks, be your own bank, don't trust anybody, we don't trust them. And that's just a destructive spiral, because what they do is they just pick fights over nothing, irrelevant stuff. It's like there's this tension of they want to be against something, and so they're afraid that the thing that they're against will adopt Bitcoin, and then they're like not sure what they can be against at that point. So I think that there's no one in the world that can't benefit from being capitalized on a conservative, thermodynamically sound digital asset. No one's against technology. There's a lot of organizations in the world that use technology in a way you disagree with. And so if you want to be successful, I think you spread technology. And I think if you want to pick a fight, you disagree with someone about, something. It's like there's no institution in the world that hasn't done something that you can criticize. And so I think that the early crypto cowboy years, they were very outsider, anarchist, libertarian. And a lot of times people think that is what Bitcoin is. That was just the stage it was in. There was a stage when aviation was for the crazies and they fly in an airplane, you might die. And then there was a stage where airlines ran it and everybody just kind of got on the airline and went to point A to point B, and it became a bus. And we're moving to that later stage.